Hey guys, welcome back to Jesse Invests. So today we're going to dive into my dividend portfolio on M1. We're going to look at what dividends I've earned this month, what total dividends I've earned, what total gains I've made so far since I started this portfolio, and what positions I hold. And yeah, so go ahead and hit that like button down below, that sub button down below. Helps me out a lot. And we're going to get going here without further ado. So here is my stock portfolio on the app M1 Finance. I currently have $2.38 in free cash in the portfolio. I have stocks worth $2,700 and $27.49.30, and I'm up 24.25% to date. 24% gains. $303 of that is the value of my stocks going up, and 78 of that is off dividends. So I have 7 slices. The way M1 works is you pick your stocks and you can sort them into categories known as slices. So I have certain financial stocks I've picked out, and I put it into a category I labeled financials, things like that. So I have categories divided up by core, which is growth stocks like ETFs, financial stocks, restaurant stocks, industrial stocks, grocery stocks, tech stocks, and healthcare stocks, with almost all of them in the green, except for healthcare, which I added this month, is down 9%. But still, again, totals out to 24%. So, with these positions that I have picked out, which I'll dive into on what they are in a moment, but with these positions, I'm up 24%, and if we look at the past, I only started this portfolio here in 2023, so I'm about almost not even 2 years into it, a year and a half into it, almost 2 years into investing in this portfolio. But thankfully, M1 has this cool thing where you can backdate the portfolio. It'll show you what your gains would have been if you started investing earlier. So if I had picked these same positions, these same stocks, and started investing 3 years before I did, then I would be up 207.78%. That means my money, up 100% means your money's doubled. My money would have been 4 times over in gains, which is really cool. So obviously I'm up 24%. If we look at year to date, I'm down 1%. In the last 3 months, I'm down 2%. Last month, I'm down 3.67%. So in March, the portfolio fell by almost 4%. Now the cool thing here too is if we look at VU, which is the S&P 500, if we look at it in the last month, it's fallen by 5.43%. So my portfolio has only fallen 3%. The S&P 500 has fallen by 5. So I am beating the S&P 500 by a little bit, which is really cool to see, very motivating and encouraging. Shows I noticed that when the market pulls back, my portfolio doesn't pull back as much as the market. So that's it. That's neat. And then from there let's look at the stocks that I hold, the best performers and the worst performers. So to do that, we can go over to holdings. I hold 17 positions. I hold SCHD, VU, Caterpillar, Texas Roadhouse, VYMI, MasterCard, McDonald's, Waste Management, Costco, Kroger, Microsoft, JP Morgan Chase, Apple, SMH, Target, Aflac, and Eli Lilly. So out of those 17 holdings, the best all-time have been JP Morgan up 64%, Kroger up 45%, and Texas Roadhouse up 30%. Then honorable mentions MasterCard and Aflac. I wish I had put more money into Chase. I bought Chase when they were at a dip, and I haven't bought a whole lot of it since then, and it's just continued to go through the roof. And then let's look at my worst performance stocks of all time. We've got Target down 19%, and Eli Lilly down 9%. And then we have break even, the S&P 500, Microsoft's only up 3, Waste Management up 7. Now what are my thoughts about these? So Target is down 18%. That's scary. I've been investing in this company for 2 years, and at one point it was up an insane amount, like 30%, and now it's down 19. So I've been seeing a lot of volatility with Target, and my initial thought was, oh my gosh, 19%, I need to sell this, but I really don't want to interrupt compounding too much. So I really don't think I'm going to be selling Target even though it's down. I'm going to continue to ride the storm. If we approach, maybe 5 years and I'm still down, then, or if I'm at break even, then I'll sell. But I really need to just hold on to my emotions, withstand this storm. As the Target falls, the dividend of it goes up. So Target had a 3% dividend. As the price falls, it's now up to 4.34%. So I am getting a nice dividend from Target, even though it's falling. Eli Lilly, well, it's down 9%. I just bought into it. So obviously I bought in at a high. So I'm not too worried about Eli Lilly. So we can move on. As I buy more, it'll average out in price. VU, break even. Well, the S&P 500 has not done very well this year, as you guys have known. As you guys probably know. So I just need to keep buying it and hold this for years, and it'll go up. Obviously, it's the S&P 500. Microsoft is up only 3%. This kind of scares me. I may be looking at dropping Microsoft from my tech section of my portfolio because I do own 3 tech stocks with Apple, Microsoft, and semiconductor ETF. If I get rid of Microsoft, I'll have semiconductors and Apple. I may drop Microsoft actually. But again, for the same logic of Target, I do want to just withhold the storm and see if it is a value play, and then maybe it'll go up in the future. Now let's look at what I bought this month, guys. What did I buy this month? So if we go to my activity here, we go to activity type, we go to trading only. On March 3rd, on about the 2nd or 3rd of every month, I make a buy. This month, $40 was deposited, and my one buy, only one company, was Eli Lilly, $38 of it. This is because I just added Eli Lilly to my portfolio in this last month. So when I loaded up $40 and the trading automatically selects the stocks for me, which I love, it picked Eli Lilly because obviously I held none of it and I needed to quickly build Eli Lilly up to the same level of holdings, the same amount as I have in other holdings. So Eli Lilly was the only buy this month, and next month it'll probably be even more bought as well. Eli Lilly is the first healthcare stock I've added to this portfolio. Healthcare is a sector that I'm not too familiar with, but I know there's an opportunity there for a lot of money to be made. So I'm going to be doing some research on the healthcare industry as far as stocks go, and see if there's any specific stocks I want to buy to add to the healthcare part of my portfolio. If I don't find anything that really calls out to me, besides Eli Lilly of course, then I will either keep Eli Lilly alone in the healthcare sector of my portfolio, or I will buy, I think it's called XLV. Let me confirm here. XLV. It is. I may buy XLV, which is a healthcare fund owned by Spider, which holds a variety of healthcare funds. It does hold 12% of Eli Lilly, so there is kind of an overlap there. But it holds United Health, Johnson & Johnson, AbbVie, Merck, Abbott, a bunch of different healthcare stocks, and it has pretty good returns in the last 5 years and max time. In fact, if I search up XLV stock and then I go to compare on Google and I compare it to the S&P 500, we can see in the last year, the XLV is the blue line. It's hasn't done too well, kind of reverse mirrored the market. But in the last 5 years, it followed the market, and again, still kind of underneath it though on returns. But on max time, if we look back since the year 2000, the last 25 years, healthcare has outperformed the S&P 500. So I may purchase this fund if I think that healthcare will continue to outperform the S&P 500 over the next 25, 30 years. Otherwise, I'll leave Eli Lilly as just a fun little play because I like the company and not get too diversified, right? So that's that. That's what I bought this month. And then let's go into what you've all been waiting to see at long last: dividends earned. So here's what we've earned dividend-wise. But yes, I deposited $40 this month into the portfolio. M1 took $3 out as a fee, so I had $37 new to spend. Added that with $2 I already had in my portfolio, and that gave me $39 to spend. And I bought $39 of Lily. I sold nothing. And here are the dividends I earned, guys. I earned 33 cents from Aflac on the 3rd, and then Target paid me 70 cents on the 3rd. I got a 47-cent paycheck from Kroger on the 3rd. So lots of paychecks on the 3rd. On March 13th, Microsoft paid me 20 cents. On March 17th, McDonald's paid me 68 cents. And on 3/28, Waste Management will pay me 38 cents for a total dividends this month of $2.76. And the last time that these companies each paid me, it was 33 cents less. So the amount that they're paying me is going up, which is nice. We can see here that they all had previous lower dividends that they paid me. For example, Aflac paid me 26 cents last month instead of 33, 55 from Target. This time it was 70. So the increase was we got a 27% bigger payment from Aflac, Target, and then no change from Kroger. They paid me 47 cents last time. Got paid 47 cents this time. No change there. Last time I got paid 18 cents from Microsoft. This time I got paid 20 cents. It's an 11% change. 65 cents from McDonald's last time is now 68 cents. That's 5% change. And then 19% higher check this time with 38 cents from Waste Management instead of 32 cents. And speaking of that change with this last one, Waste Management, it's not just from buying more of the company. That dividend went up because there was a dividend increase with Waste Management, which is not too common, but really cool to see. And I buy companies that I think will do this, that have a history of doing this. So Waste Management, there was a 10% increase on their dividend. So their annual dividend jumped by 10%. So instead of $3 a share that they pay you, it's now they'll pay you $3.30 a share. And instead of their dividend yield being 1.33%, it got jumped up to 1.47%. And my annual, how I was affected personally, is my annual dividend from them went from $1.38 up to $1.52. So again, these are all small changes because it's all percent based and we have a low amount in our portfolio. But it'll steamroll. The more money I have in my portfolio, the more I get in there over time, the higher these changes will be. Soon it'll be an increase like this will go from $138 dividend to $152. It'll have like a $15 impact instead of a 15-cent impact. So that was cool that I came through like that. And then, so those are my dividends earned, $2.76 this month. If we go to my M1 dividend income tab, that means that in March, the $2.76 is the greatest I have earned this year so far from this account. Last month we earned $1.08, and January we earned 48 cents. So we continue to earn more and more each month, kind of cool. We're at $4.32 earned so far this year, an average of $1.44 a month. And hopefully we pass this $56.74 that we earned last year. I really want to get to $100 or more. I think it is possible. I think right now we're on pace to earn about $60 in dividends this year. So pretty stagnant because I'm not putting a whole lot of money into this account right now. But I hope to continue that. Continue adding more and more money. So we will see how that goes. And then, last but not least, let's jump into a cool little tool I have called Div Tracker, which tracks my dividend portfolio. We can see here that, yes, I currently have an annual dividend income of $57.64, $4.08 a month, $1.11 a week, 16 cents a day, and I get paid a cent an hour in dividends. My yield is 2.37%. It's a 2.12% yield, but because I got in at lower prices, that's up to a 2.37 yield. So that is neat to see. And my biggest dividend payouts are schd, which pays me $23 a year. VU pays me $7 a year. VYMI pays me $6 a year. And then my individual stocks that pay me the most are Target because of that massive dividend yield, Caterpillar, and McDonald's. So those are all good things. And let's go to something real quick. I do want to see under portfolio, I want to see target. I want to see what that dividend yield is. 4.31% current yield. That is crazy to me. Crazy, 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 crazy. Okay. And then there actually is one more thing. If we go to return, investments return visualizer, we can look at how my M1 dividend portfolio has done not only versus the S&P 500, but versus other common benchmarks like Bitcoin, gold, and I threw in my own retirement portfolio, my Roth IRA in there as well. So we can see here that I've been tracking this since January 1st, 2024. This is when I started my Roth IRA. This is when my M1 dividends, this is when most of my portfolio started around the same time. So we can see here that in this last month, let's minimize that. 1 month ago, my M1 dividends portfolio, the one I just showed you guys, was on top. It was beating the rate of return of gold. It was beating the market. It was beating my retirement account. It was beating Bitcoin even. And now things have changed in this last month. With the market falling, my dividends account fell, the S&P fell, my retirement account fell, Bitcoin fell, gold shot up. And that's usually how that works. It seems to be when the market falls, when everything falls, people turn back into gold and buy more gold and invest in more gold. So gold price shoots up. So right now, the rate of return of gold is beating everything, the market, Bitcoin, my two portfolios. So do with that what you will, but gold is a nice little hedge to have against other things. So I may be buying some gold here soon. So that's just something to consider. But yeah, if you guys enjoyed this video, if you got some, learned something out of it, got some entertainment out of it, hit that like button down below so you can see when I upload every month to update this portfolio. Thanks for tuning in and joining the journey, hopping on the bandwagon here. We got fun stuff coming up, and we got a lot of other update videos. If you go ahead and click on my channel, see my other videos, I have stuff on personal finance, I have net worth tracker updates, and I have updates on this right here in the red, the Roth IRA. I actually do update videos on that as well. So you can go ahead and see that, the flip side, the other portfolio I have, see what's in there. So yeah, thank you guys for watching, and see you guys